Hello everyone and welcome to my YouTube channel. Today we have Yatharth with us.
Hello.
He's a CFA chartered holder and currently pursuing his MBA from IIM Kozhikode. So let's hear more about Yatharth from himself.
Hi Sudhanshu, how are you?
I'm good. How about you?
I'm good. Every day it's a new challenge.
Yeah. So why don't you introduce yourself to our audience?
Sure. So my name is Yatharth. I was born and raised in Bulandshahr, Uttar Pradesh. And then academically I pursued BCom honors from Delhi University, Motilal Nehru College. After that I pursued CFA program and I'm a CFA charter holder. And after working for approximately 41 months, I'm here in IIM Kozhikode pursuing my PGP finance program. So yeah, finance guy.
So how's your MBA experience right now?
So MBA experience, so it's a very long story. I mean, as far as I remember, जितना शुरू में मेरा मन था ड्यूरिंग बीकॉम, मुझे एक ही चीज़ की क्लैरिटी थी. तो मुझे क्लैरिटी ये चीज़ की रही है कि मुझे क्या चीज़ नहीं करनी है कभी. तो क्या चीज़ नहीं करनी है उनमें से एक सबसे टॉप पे थी MBA.
Okay.
और क्योंकि मुझे लगता था कि कभी MBA ना वैल्यू ऐड नहीं करती. MBA बस एक प्लेसमेंट एजेंसी होती है जहाँ पे आप जाते हो, 2 साल वेकेशन बनाते हो. Your MBA experience is good if you get a good placement out of it, and it's bad if you don't get a good placement out of it.
Okay.
But I think over the past few years, being in the industry, talking to a lot of people who come from premier business schools of India, I got the perspective that it's not all about that. It's what you really want to take out of your journey.
Okay.
So, having said that about my MBA experience, so far so good, I would say. I'm learning new things जो मैंने कभी सोचा नहीं था कि हाँ ये सब मैं पढ़ूंगा. And the subjects खुद में ही इतने interesting होते हैं, financial econometrics. So since I think we're studying PGP finance, so it's although more finance oriented, but the kind of activities that we're doing, the kind of things that we're learning, and the kind of people that we're meeting. So that's amazing. Even yesterday I was just talking to one of the friends who's graduate from IT Kharagpur, and he pursued computer science over there. So I was just trying to understand how to deploy a WhatsApp bot, and I think that's how a fun evening is spent in IIM Kozhikode.
So you get to interact with a lot of people because IIM Kozhikode is known for the diversity campus. So definitely you'll meet a lot of people from.
Of course.
Yeah. So talking about your work profile, can you please brief us before joining IIM Kozhikode? What were you actually working on? Maybe what are the kind of companies you've been associated with?
So regarding my work experience and my previous companies, I'm a big joke in the campus because I worked in 3 out of 4 big fours, and
Okay.
I'm supposed to work in the 4th big four when I exit out of IIM Kozhikode to complete the Chardham. But yeah, big four experience was very nice. I started with KPMG Global Services. So that was in 2021, and that's when the work from home culture was introduced with the big fours in the Indian context. But yeah, I learned a little bit of things. So again, since I was in auditing, तो मुझे ये समझ आ गया कि मुझे auditing नहीं करनी है. As I said कि मुझे clarity होती है कि मुझे क्या नहीं करना.
Okay.
तो clarity मिली, auditing नहीं करनी. So वहाँ से I was still studying for my CFA program. I had cleared L1 during the KPMG stint. Then I was giving my exams for L2, and by the time I was giving exams, so I had already resigned without any offer from any of the other firms.
Okay.
So that's when I luckily connected with one of my colleagues in PwC India, who then referred me to a role in management consulting, financial modeling.
Okay.
So there I built models for various industries, various clients. So that was my first ever technical exposure to the things that I had learned during the program. And what we know about corporate finance a lot. Then after that stint, I was working with EY. So in EY, I was part of the merchant banking team, where again we were given the assignments of valuations and modeling with respect to different companies, different firms, banks, essentially to analyze what is right and what is wrong in their financials, and to give the projections in order for them to either raise money from private investors, or if they're trying to go for red herring prospectors to issue shares. So these kind of projects, very interesting projects.
Okay.
Yeah.
So you mentioned that you've been associated with 3 of the Big Four out of 4.
Yes.
So won't it difficult for you to switch from various companies? How do you get multiple jobs within a span of 41 months, as you mentioned?
Yeah, so I think the first one I would give credit to the placement cell of Motilal Nehru College because that was a placement, campus placement.
Mhm.
But I think after that it really depended on my interest and how and to whom I talked about my career aspirations.
Mhm.
Because as soon as I understood that I don't want to do auditing, I was really left alone कि भाई मुझे फाइनेंस में करना ही क्या है, क्योंकि फाइनेंस खुद में ही बहुत बड़ा है और उसका एक बहुत छोटा सा पार्ट होता है कंसल्टिंग, इन्वेस्टमेंट बैंकिंग या फिर मॉडलिंग. So when I was talking to people over LinkedIn, that's when I got a referral for PwC. And then during this time also, since people are connected in industries, and that's very important for you to have friends in industries.
Okay.
So similarly, I connected with a person back in 2021 who was also into financial modeling, working with the EY team. So I was connected with him. We used to talk to each other with respect to how the industry is shaping out, what kind of projects he's dealing with, not sharing the sensitive information, but the learning curve aspect of it. And that's when I just hinted I'm looking for a switch, and then immediately that person referred me to EY, and that's how I got my job in EY as well. So 2 out of 3 jobs I got because of referrals and maintaining relationships in the industry.
Okay, so I believe it's very important to have a relationship.
Absolutely.
Now, you mentioned that you've been working on the financial models. Must be you have worked for various industries as well. Can you tell me what are the industries you have worked for? Along with that, let's suppose someone wants to do financial modeling. So from the scratch, how one builds a financial model? Someone, let's suppose, is a fresher or who wants to go into this financial modeling, how will he do it?
Right. So coming to your first question with respect to the industry exposure. So the industry exposure that I've had is of in the space of renewable energy. Okay. So most of my work has been revolving around the greenfield project. So now I think I'll just clear it out. There are 2 types of projects, greenfield and brownfield. Okay. Greenfield is something when you start a business from scratch and when you're looking for its lucrative KPIs. If you were to build it from ground up, then there are brownfield projects where you have to expand. So again, my focus was mostly on the greenfield. Now a lot of focus was also on the project finance aspect of it, where we were working on a lot of renewable projects. Let's say a company that wants to create a grid house of 100 megawatt, 200 megawatt, how to analyze that. Second kind of projects that I had were with respect to the aviation industry, where we were dealing with the airlines and airport operator for the acquisitions and mergers. These kind of projects. Then after that, I was there for certain oil and gas projects as well, where we were trying to understand if we deploy a city gas distribution system in particular states of India, how would that work out for our client? Okay. So these are some of the headliner projects that I've had. Of course, also worked in other infra projects such as SEZ establishment in Nepal. And then deploying so a lot of these schemes. So when we talk about the kind of greenfield projects I was doing, so I was also exposed to a lot of public and private partnerships. Okay. Where the government of India was looking to deploy their resources for example, one scheme that is upcoming is the PM Mitra Yojana. What it does is to enhance the textile industry of India, and they are establishing I think 7 or 8 kind of PM Mitra houses. So one of them is in Lucknow. Okay. So my part was to analyze that end to end. Now coming to the financial modeling aspect of it, how to build it from scratch. I'll give it in 2 senses. One is when you work in an industry, and second is when you're making it for your own. So if you're making it for your own, very basic idea is that financial model is just a calculator. Okay. What you do is there are 4 mathematical operators: plus, minus, multiply, divide. How you use that effectively so that you can build a comprehensive calculator where when you put in your inputs, you should get a sane output end of the day. And no matter how you stress it, in whatever conditions the model be or the calculator be, it should not fail. For example, a simple example of how I used to build for, let's say, a greenfield project. Let's talk about a company which has 50% of equity, 50% of debt. Now for the 50% of debt, they want to calculate how much should they repay each year so that their cash flows are maintained.
Okay.
Now for this, of course, you need an understanding of all the three financial statements and their direct and indirect links with the other calculations, such as if I divide. So financial statements, these are your outputs. Your NPV, metrics like NPV, IRR, payback periods, discounted payback periods, these are again your outputs. The second part in a financial model is your calculator, where you essentially build your calculation. For example, debt. You have 100 rupees of debt, 50 rupees of debt, and now you want to repay it.
Correct.
Now, what you do is, you let's say amortize it based on 10% each year. So in 10 years, you are paying 5 rupees of your debt, right? And then there would be some interest.
Correct.
That is your total debt service, how you're keeping it. Now, this is a very simple calculator. In the financial model context, it becomes very important aspect because none of the calculations are treated in isolation. They are individual. They are linked with the other calculations as well. For example, if I'm a business owner, I have to see my debt, how it is related to my cash flows, how it is related to my taxes. What if I take over another company? Are my tax liability going to reduce or increase? Now again, it is very important to have an understanding of the taxation laws in which jurisdiction you're working in. And then again, your debt covenants. Because in the industry context, you don't get certain simple terms. You have to do a lot of permutations and combinations. That's when you arrive. So again, financial modeling is nothing your calculator to let you do those permutations and combinations to find the optimized inputs. This is the kind of business I want to do, and this is how I want to invest, and this is how my life is going to look like for the next 15 years if everything goes right. Of course, no financial model is 100% right. Our job is to make it least incorrect. Now, in aspect of the individual capacity of financial modeling, it's nothing. But again, once you just grab an understanding of how the discounted cash flows work, what you do is you just discount those cash flows, and then again you decide your KPIs. For example, one of my friends, she built a financial model to decide whether to bring her car from Kolkata to Hyderabad to drive or to use cabs. So she just built a simple calculator for it, for how much tenure, however tenure she forecasted that she'll be in Hyderabad. So just to calculate the savings, she built a simple calculator, and I think that's how anyone can approach it.
Okay. So usually when I see any other financial model, it is comprised of the P&L, balance sheet, and the cash flow. Cash flow is linked with the P&L and the balance sheet. Now, when we build a financial model, there's a assumption sheet where everything is linked, right from the revenues to the all the current asset that I'll be holding, the vendor financing that I'll be getting from the third party, etc., etc.
Okay.
So, what are the basis of those assumptions? What is the let's suppose I'm taking 5% as my growth. So, what is driving that 5%? Why can't it be 10%?
So, as I said, you need friends in your industry, and a lot of these assumptions, when we actually come out of the theoretical world and go to the industry, they come from a lot of business acumen. So since I come from the Big Four, the culture is essentially there are certain subject matter experts in the form of partners that you get. Now these partners, they have been working in the industry for approximately 20 to 25 years, or maybe less, maybe more. And this is not the first time they're handling a kind of industry that they're into, a kind of project. They have always done it before. So when we talk about the assumptions, there are two ways to do it, and they both should converge end of the day when you're putting the final assumptions. So how you start it essentially is you do your research based on various terminals, various data sources. Secondly, you understand the company itself from the internal stakeholders, how it is acting up, and what is your own personal forecast. Now, this is a skill that you have to build over the time. There is no magic formula for it. Neither can I articulate it in a very short span of time. But yeah, this is a skill that you have to build to analyze and research. Second is, once your research is done, in isolation, you also get figures from the industry, from the partners, from the subject matter experts. A hardcore number, like this is the scenario, this is the context, what should be the growth rate. Now, if you see there is a very, very misalignment between these two figures, you try to understand why this is happening. What are the factors? If let's say 5% is what partner has told me, but from my research 10% is there. I need to analyze the difference, I need to converge it. But if they are coming as converging, then it's fine mostly. End of the day, you always get a sanity check from a person who is again an industry expert who looks at your whole model from a bird's eye perspective, so that you don't put any incorrect assumption. Over here, one concept I think which is very, very famous in the financial modeling or finance itself is GIGO, garbage in, garbage out. Your model is as good as your assumptions, but if you put garbage inputs, you're just gonna get garbage outputs.
Okay. Yeah. So this statement is valid for someone who is already working in the industry. Let's suppose you were associated with partners or with some subject matter experts.
Right.
Let's suppose I am not connected to anyone.
Okay.
So what are the sources that I should look for my assumption? Maybe statistics data or something related to industry that I should look forward before making any assumptions.
So what kind of model are we talking about here?
So we are talking about financial models only. So let's
No. What is the purpose of the model?
So there could be various purposes. First, I want to invest. The other one could be that I want to check whether the company is valued correctly or not. I want to give the buy and sell decision. The other one can be, you mentioned that I want to do it from the personal front, whether I should rent it or buy it. There could be many ways, but what I am talking about currently is a valuation of a company.
Okay. So when you talk about valuation of a listed company, I would emphasize, a lot of these assumptions, they are given to you in form of the annual reports that you get. Secondly, in form of the management discussion and analysis. And thirdly, on basis of the various equity research reports that a lot of firms are publishing out. So these are the three main sources. These are the three main credible sources. So when you analyze any of the company, there is an approach that you have to take. It's either top down or bottom up. When you talk about the top down, of course, you first analyze the economy, then the industry, then the company, and for the bottom up, vice versa. So again, economy, you have a lot of data available from the ministry itself. The Ministry of Statistics, something, MOST, something is there.
Okay.
And Department of Economic Affairs is there for you to gauge the KPIs. If you're looking for any sector specific, let's talk about FMCG for example. You can get your sector economy specific metrics from there. Then you drill down to the sectors. Now for sectors, you'll have to research a bit more. You can go to the sites such as CRISIL for understanding how the industry is shaping out right now, for you to get a hang of the assumption. So before coming out at the hard numbers, you should always have an idea on basis of a simple metric, of a simple scale, high, medium and low. How is this metric going to look like? Is the risk high, low, medium? Is the growth high, low or medium? So first you have to gauge this idea. Once you get this, the third part is when you actually go deep down into the reports, into the equity researches that various companies have been publishing, and you try to make a sense out of it. Now, of course, any research will cover one aspect of the company very well, but they might not do in the other aspects as well. For that, you have to create a synergy of reports from where you can get out all the relevant information that you can get. Now, this process, of course, has an information cost. Information does not come free. And plus your analysis cost. With analysis cost, sometimes you are biased with the company. Let's say if I love Nestle a lot because they are number one in ESG metrics, and I really want their valuations to come up. Somewhere I would always be like, nahi yaar, 5% growth nahi, I think it deserves 7% growth. So this bias is very important for you to remove. So that is your last stage. Once you train out your assumptions, always try to find out people who know this and get it checked. Even though if you don't have any friends in the industry, people are there to help you out on LinkedIn, Reddit, anywhere.
Okay. So I think we have covered a lot about financial modeling.
Yeah.
So now let's know about you only. So I know that you are a finance guy. What else do you do? Means there's an assumption in the market that someone who is from finance is a geek. He does nothing apart from study, nothing at all. So is that true for you?
I mean, me landing up in finance was purely accidental. So I think the nerd thing might or might not apply. I'm not very sure. But how I look at myself is I love exploring life. I love perspective in life and I love having dialogues. So talking is something that I've really loved. So that I think I started from UG. I was there in photography society, theaters, entrepreneurship. So all of this really gave me a kick to go out in the world and just understand the world in a more articulated spectrum. That is one thing. Secondly, I think that was the time when I got an understanding. Okay, maybe I can also write songs. So that's when I started to write songs. I used to perform in Delhi University circuit. I used to also perform in Hyderabad. I did a lot of gigs. If in case you know this artist called Rabbi Shergill, I got an opportunity to like jam with him for the show. So that's quite amazing. Apart from that, I think recently I've been trying to explore Kerala. That is on my bucket list. I've never explored India enough, and I want to go in the roots.
Okay.
So yeah, that's the kind of person I am. And I love people. That's that.
Yeah, got it. So just one last question before we wrap up. You are a CFA chartered holder. Someone who wants to break into finance, what are the qualifications does he need to have? Is it the fancy CFAs, CA, etc. required for this, or just you need the interest towards finance that should be sufficient enough to get into finance field?
I think to enter into finance is analogous to getting more likes on Tinder. Whereas when you talk about qualifications, they are the headliners. They will grab attention. For me, I think even after the referral, how I got the job for PwC, it was not because of my credentials, but more because of the knowledge that I had because of the program. Because I had a deep understanding of the program and finance, that's how I got the job. But that was not the case when I worked with EY, because I was applying for a little bit of senior position, where my CFA charter was given very high value in terms of ranking. So I think it's a mix of both. But this is again in the early stage of your career. Degrees like CFA, CA, FRM, they can only take you so far so that you can try to get an opportunity to apply for the opportunity. But after that, it is totally dependent on your interest, your skill, and how you shape up and what you contribute on the table. That's there.
Okay. Yeah, understood. Really insightful. Yeah. Thank you, Yatharth. Thanks for coming to my YouTube channel. It was great having you here, and I'm really sure that people would have liked the conversation we had. Thank you so much.
Thank you, Sudhanshu. Thank you for inviting me.
Yeah.
See you in class.